taking a top-bottom approach, we're going to look at the monthly chart, which we have here in front of us. And as you can kind of tell, this goes back quite a ways, all the way to the .com era. Priceline was one of the big high-flying internet stocks. Went through a crash and came down here and bottomed. So then it went up, and then it came back down again to test its lows. Now when it did that, it went ahead and it formed a low, formed a high, and then formed another low. Now while this could be looked at like a support, price coming off support, the things that were interesting about it was that it was also forming a double bottom, which showed that there was a reversal underway after a steep decline. So looking at the monthly chart, we also saw something else kind of develop. Now using your Fibonacci trend, if you come back and you look at the last leg down right up in here, you see price come up and touch somewhere about the halfway, almost touched to the small 60 right here, the retracement, and then it came back down, and it looked like it might kind of wobble and go down further, but instead it entered a period of price contraction right here. I'm going to highlight this area for you right there. Now what took place in that price contraction was also you start to see this pattern kind of emerge here, and this was a triangle. So here's what price was telling us so far. See if I can make that a little bit more symmetrical. Okay, steep decline, market was falling like a rock, and so for a couple of years the stock was a straight bear play all the way down, but then the bears started to exhaust themselves and it hit a low, tried to bounce back up, and then the bears tried to take back control again and went down and tested support. But look at what was also happening here. We know that's what price was telling us, that the bears were pushing down. The bulls tried to get control, but the bears pushed it down again, but they just couldn't quite muster getting a lower low. And so you start to see volume spike a little bit right here, and then you start to see it go higher as the bulls are trying to go back and take control, and then it just went and made a steady decline. So here it is that you have a lower low, a lower high, and then you had what should have been a lower low, but it ended up stalemated. It ended a period of contraction right up in here. So, and you also had the double bottom form, and then volume was declining. So really there was no more bearish volume here. All the bears that could try and jump in, they were all in. They couldn't get control of the price trend. So then price started to go up again. And when it reached about the halfway mark of this previous retracement, it should have gone down. Instead, it just vacillated back and forth. So what do we know about triangles? Triangles, when they come, they really show a lot of doubt, a lot of anxiety. What's going on? Traders here don't know which side of the market to take, and so it kind of vacillates back and forth and back and forth. And volume spiked right here, and big time, but it couldn't quite get the market down. In other words, when you saw this huge volume and this huge spike in volume, it should have been a shoo-in that price came down, but it didn't. And because it didn't, that kind of showed you, you know what, there's some doubt entering the market, and that kind of is what created this triangle here. So then you start to see a rise in volume, and this volume kind of came over here and peaked just over the edge of the triangle, and you start seeing the triangle go up, up. And as I've said in the previous video, when price retraces about 80% of its move, which is what it was doing up here, was about 80% right here from this leg down, then there's a good chance, almost statistical a statistical guarantee that that high was going to get tested and maybe even exceeded, and that's what ended up happening. So we see that price is starting to trend. Now let's break down a little bit further, and let's take a look here on the weekly chart. We may come back to the monthly here. So we want to go to it from a long term to an intermediate term time frame. So here's price. What are some of the things that we see that it's interesting about price? All right, here's the triangle. It goes up and hits that 50% retracement. It's going higher, it's going higher. So we know it's going to test the previous high, which we just pointed out. And we start seeing a bunch of higher highs and higher lows take place here on the weekly chart. and we start to see volume kind of swell as well. Now we go into another decline, and we start to see this rise. Now let's take a look. Here's a low, 45.15. 1, 2, 3, 4, 5, 6, 7, 8. So that's 8, 67. So the high was 67.40 here 8 weeks later. So we had a low here of 45.15. 50% of that is going to be about 22.50, 22.60. And that's what we ended up hitting. 72.19, is that right? 1, 2, 3, 4, 5, 6, 7, 8. Yeah. So let's zoom in a little bit right here. Here, that makes it a little bit easier. So right up in here, we had a 50% move off of the high. You see that? On October 31st, there was a low of 45.15, and then 8 weeks later, 1, 2, 3, 4, 5, 6, 7, 8, we hit a high of 72.16. That's greater than 50% off of the low. So right then and there, that's what you call a juggernaut move. Something's happening in the market, and Priceline was gathering steam. So it was a safe bet to say that, you know what, we need to get in front of this move. Now, this would have been the first entry. Okay? Now, if you wanted to play it conservatively, we break out the old fib charts again here. And off this leg down, we saw that price, this entry would have been right under the 40 retracement right here, which, depending on your tolerance for risk, may not have been a good play. I personally wouldn't have done it because this is a strong move. This is an actionable play by itself. Forget fundamentals, forget everything else. You see price spike like this in an 8-week period, then you need to get in front of it. So here's the 40, then it goes and tests the 60. So it enters a small period of contraction right up in here. I'm going to highlight this for you. Okay, so right there, that's when we were going to start to get long right above this high, and it didn't retrace a lot. And, you know, these fib charts, they work both ways. So let's take a look at that. Let's do a fib chart right off this low, off of this high, and this gets a little convoluted here, but bear with me a second, okay? I'm going to go ahead and I'm going to take this one out. Okay, here's the small 40. Anything that comes down to the 40 and touches off, there's a really high chance it's going to exceed its former high. It didn't even get to the 40. All right, it just took off. So that was an actionable play right there. If you want to play it conservatively, but if you wanted to go ahead and jump in front of it, like I would have, that's where you would have gotten in, and then you can add it to the position up here. Look at the gap up in price. Price went ahead, popped up some more. Price retraced a little bit. Came down here and tested the 40, so there was a good shot that it was going to go ahead and keep going higher. Look at that huge volume as price was erupting out of that position right there. So price is continuing to climb, entered a period of price contraction. This is kind of like a flat base pattern right up in here. So that would have been an actionable play as it was coming up through the high right about right there. Another period of contraction right there. Sorry. And price was continuing to climb, and it's still climbing. It's almost $1,300 a share, give or take. Actually, yeah, it's more than $1,300 a share. Now that we've kind of highlighted some of these areas, let's go down, let's break it down a little bit further here. We're going to go down to the daily chart. Okay, this is the last contraction period. As you can see, price was kind of zigzagging and zigzagging. Yeah, you can even kind of see right here there was almost like a very loose, actually let me do something else. There was a very loose double bottom that took place in this contraction period. It was right there, right there, and right there. So there's your first bottom, there's the middle point, and there is the second bottom testing support. Price came up and exceeded it, and it got real sloppy up in here, You could have played it, but I don't know how it worked out. I mean, usually when you see big price gaps like this in between, that's a lot of volatility. Okay, so somewhere above this trend line right here, off the midpoint of the double bottom pattern, there was an entry. And you know, if it's zigzagging like this and you got stopped out, you want to wait for it to get a little bit higher, and you see it start to come out of the top of its pattern. If you didn't get in there, this probably would have been a smarter play, about right up in here, and it ended up gapping higher, and it's been going higher since. So yeah, and see, it's continuing to go higher. There's some nice, really sweet pullbacks that were happening here too. See, there's kind of like a little mini double bottom right there. You see that point right there, and right there. That would have been a good pullback. It got kind of messy in there. I don't know how much I would have gotten on it. Yeah, there were some pullbacks in price, but there was nothing really clean. Usually when you find a good inside bar, just, you know, a good persistent trend, those are videos for another day. But at any rate, you know, price line, if you got in it early, way back in the day, which was really possible, but, you know, at the very least, you could have gotten back on it, you know, as far as maybe a couple of years ago when it was coming out of this decline, or at least caught it was coming up, and it really would have put you in a really strong position to profit. I mean, look at this. Back in 2009, I mean, price was as low as $48.30, and the climb has gone all the way up to over $1,300 now. I mean, just staggering. And that's the thing, you know, it only takes one or two of these really good moves to give you 50% or 100% or more. But, you know, if you get into some of these early moves and some of these big emerging stocks, there is the potential for you to really just to hit a home run. I mean, sometimes you don't get them in a year. Sometimes it's after a few years of trading, or if you're holding on to a position in trading and steadily adding to that position. This is a really good example of that. There was also some really strong fundamental indicators that showed that that price line was going to be a force to be reckoned with, and that's how to get under the hood. That's a whole different subject. Maybe we'll save that for another video. But, you know, they are really good about rewarding shareholders. They don't keep, you know, issuing stock and offering more stock and diluting their shareholders. They really know how to increase shareholder value, and there's little things that you can do to kind of indicate that. But as you can see, the really good, smart plays here. Just take some basic technical analysis and studying volume, and you would have had a home run runaway trade. Okay. Well, listen, I hope you found that informative, and I'll see you in the next video.